Rosie, it's great to have you with us. So many different moving parts. Where do you land this morning?
Well, first, John, great to be on the show. I think you rhymed off like five different questions,
I
so
did.
I hope you slotted a half an hour for me. Where, your first comment was, where do we go from here? And the answer to that is who knows. This is Donald Trump making uncertainty great again. And really, I'd probably go back to something Jay Powell said a couple of months ago, where he said the reason why the Fed's standing pat is he says, what do you do when you're in a dark room with furniture? Is you stand still. You don't walk anywhere because you're probably going to trip. So, we know two things. We know that Donald Trump loves tariffs. It's part of his industrial strategy. He can couch it in terms of fentanyl and border issues. But when push comes to shove, he thinks that everybody in the world, and principally Canada, have just been freeloading on the United States for decades. This is almost a religion with him. So, no, this isn't something temporary. I wouldn't actually overplay this 1 month reprieve, if you want to call it, on the automotive sector, because what happened was that the big three CEOs talked to Trump and told him that it was going to detonate, the industry, and with massive job losses, especially in the red states in the Midwest. So if you're thinking that, oh, Donald Trump succumbed to pressure because of Canada or Mexico, no. And he's openly saying that, we're doing this reprieve so that the automakers in the United States can bring their assembly lines into the U.S. Now, I don't see how that's possible in a 1 month span. But for people to think, oh, my God, this is like great news for Canada, a 1 month reprieve, get your head out of the sand. He only did it to protect the U.S. industry. And then he's going to be putting tariffs on everything else, right? So even if he carves out the auto sector in general next month, and maybe he will, because what's the reciprocal tariffs on the auto sector? There are no tariffs coming across the borders on auto parts. But he's still going to be doing everything else, and not just here, but globally. So what's not going to change is really one of your first comments, which is this elevated level of uncertainty. And when you just model out uncertainty on its own, that has a detrimental impact on economic activity because it causes businesses and consumers to freeze up. Just the uncertainty, just the specter and the threat of tariffs alone is enough to generate the conditions for a recession. By the way, not just in Canada, where I think we're all in agreement that a recession is coming, but also in the United States.
So, as you said, you model out the numbers. What does that look like? When does a recession risk become a recession?
Well, I think that you could be looking at it starting in Canada very quickly, probably with a bit of a longer lag in the U.S. But keep in mind that the Atlanta Fed nowcast, last I saw, was negative 2.8 for the first quarter. Now, a lot of that was a quirk because of this massive run-up in gold imports into the U.S., which is showing up in the trade numbers. That won't persist. But real private sector sales in the U.S. for Q1 is coming in flat as a pancake. And frankly, I do not know. You'd have to tell me what the catalysts are for a revival. So I'm thinking that in Canada, it's going to be starting the next couple of months, and probably in the United States, I say by the third quarter, we're going to see the seeds being sown for the recession that never came, that nobody believes will ever come again, is going to be staring us in the face in the second half of the year. I want to make this point, make it emphatically, that this is what happened in 2019. In 2019, the Fed was consumed with inflation. Okay, the tariffs were going to boost inflation dramatically. And we went into 2019 with the Fed penning in 2 rate hikes in its dot plots, okay? What do they end up doing in the second half of the year, John? They cut rates 3 times. Why? and nobody talks about this, because we actually had a recession in the United States in two areas of the economy. Capital spending went into a recession of its own, and so did industrial production. And what kept the Energizer Bunny going was the consumer. But the consumer was still feeding off the $1 trillion tax cut that came in 2018. There's no tax stimulus right now. There's only spending cuts out of Doge. So this is going to have a detrimental impact. Trump is doing everything in the opposite direction to what he did back in Trump 1.0. So I think that the outlook, whether you have a recession view or not, I think there's a lot of people that think, well, the recession never came in 2022 and 2023, so therefore the business cycle has been repealed. I'm not in that camp, but I defer. But I think that the economic outlook is extremely murky, and I'll tell you that we modeled out various levels of uncertainty, economic uncertainty, policy uncertainty, trade uncertainty, and ran it into our models. And if sustained, it drags real GDP growth by -2% in both countries, by the way. So it's just the heightened level of uncertainty that could cause the conditions for a recession. Now, the run rate in U.S. GDP growth is higher than in Canada, so maybe it leads just to a flat economy in the United States, which still means the unemployment rate goes up, and that's going to hurt a lot of people. In Canada, the run rate on GDP growth is quite a bit lower, so I think that the recession call in Canada is a lot easier, over beyond just the uncertainty impact. But that's what people don't talk about, is they're talking about, is Trump going to do this? Is Trump going to do that? Oh, what if we get a carve out for the auto sector? The uncertainty alone causes businesses to shelve capital spending plans. The Bank Canada knows that. And it causes households to raise their precautionary savings rate at the expense of what? At the expense of spending. So even if nothing else happens from here, just this level of uncertainty is going to be a deadweight drag on the economy for some time to come.
If some automaker executives can speak to the president and highlight what all this means for their industry, if we see more negative signs for the economy, can someone else get the ear of the president? Or, you know, is that just something we can't model in because we just don't know?
Well, I don't know. I don't know. Is he like Fred Flintstone with kazoo in his ear? I mean, it's a. I don't have the answer to that. Who's going to talk to him? I guess. I mean, it's even astonishing that it took the big three CEOs to talk sense at least into deferring what he was going to do in the auto side, because, of course, it's going to be horrible for Ontario. I mean, detonation for the Ontario economy in terms of the importance of the auto sector, but it's going to be also very hurtful for the U.S. economy. I don't know why, because he apparently was planning all this. Trump knew he was going to be elected. Elon Musk was already doing all the Doge stuff months before the election. He knew that he was going to be elected. Totally prepared this time, so we're told, compared to Trump 1.0. And yet, at the last second, well, I'm going to do not a carve-out, but a temporary reprieve, call it, for the auto sector. I think that I'm not so worried about the auto sector right now. I think probably he'll find a way to carve it out, because assembly lines are not coming back to America that quickly. And certainly the auto sector will be enough to generate a recession in the United States because of all the powerful spin-off effects to other industries in the product sector and, by the way, in the services sector. But it obscures the general point that I'm making, is that he could carve out the auto sector. I think that, you know, we dodge a bomb, but we're not going to dodge the bullets, because he's putting tariffs on everything else. Yeah. And it's that general level of uncertainty that is just not going to go away. And I don't know who he's going to talk to. Who he's going to talk to? The psychopaths in his cabinet that all support him. You got to understand, you know, what makes Trump different, people are scared of him. His own party is scared of him. Congress is scared of him. And the only way that, if you're going to ask me, what is the best way to get this to all end, is to create the conditions for his approval ratings to go down. That's why I think Doug Ford, what he's been saying, has been great. export tax on electricity or an outright ban. And I would say, I'm surprised that Alberta and Saskatchewan wouldn't do the same thing, because where's the U.S. going to be getting its heavy oil? What, Venezuela? It's potash. The thing that really troubles me is that normally if you're going to put on a tariff, it's to protect your domestic industry. He's putting tariffs on Canada in industries that the U.S. doesn't even compete with us in. But, we can hit back. We can hit back hard. And my hope is that, and look, there's ways we do have actually ample fiscal room at the federal level to cushion the blow for the provinces that would take this action. But I come from a mentality that, when the bully in the schoolyard gives you a black eye, you don't punch back, you go burn down his house. And I think that there are a lot of things that the U.S. cannot substitute away from. That we can inflict quite a bit of pain. We're David in this David and Goliath economic war, and that's what it is. But remember, David won that war. We have more leverage than people think. But if you're going to ask me, the best way to get this to end is to hit right back where it's going to hurt, because there's a lot of things that we produce that are critical to the U.S.
Now, outside
of the question is whether or not our politicians have the courage to do it.
So we'll see what happens with that part. And then the other part, twofold, monetary policy and stimulus. So we're watching both. What do you think the Bank of Canada is going to do? And can you give us your view on where rates go from here? And if there is an ability for us to provide some fiscal stimulus outside of whatever provincial or federal leaders are doing on the tariff front, how far can we go? How far should we go?
We could go. Look, I'm stunned that I read in the media about, good grief, there's going to be a $51 billion deficit for this year. Oh, like, run for the hills. Really? That's, I believe, if my Hewlett-Packard calculator is accurate, that's a 1.6% deficit GDP ratio. The U.S. is well over 6%. We have a federal deficit GDP ratio below 2%. We have a federal debt to GDP ratio of just over 40%. Guess what, John? These are the same numbers that Germany has. We have the same fiscal numbers that the federal government in Germany has, and look what they're doing right now. And look what's that's done to their stock market and their currency. Now they've been forced into it because of Donald Trump, and you could argue for different reasons. But we have ample room at the federal level. If we have a balance sheet crisis in Canada, it's actually at the household level. It's not at the federal government level. And so I think that we should be considering a large-scale fiscal stimulus. I do think that the provinces should be hitting back hard. And I'm talking about either export bans or export taxes. Forget the tit-for-tat tariffs. And I think that the federal government should play a role in cushioning the blow, because there's going to be a blow. But we have to be thinking, what's the end game strategically here? You're asking me a question, who's going to talk to Donald Trump? Who's got the answer to that? What he will respond to are two things: the stock market and his approval ratings. And if Canada can play a role, let's say on the approval ratings, because if we hit back hard, especially in the red states, they'll be most affected. What happens next? What happens next is that these House Republicans and Senate Republicans will no longer be scared about Donald Trump. They'll see exactly what's happening. And then all of a sudden, what's going to disappear is this big, beautiful budget bill that Trump wants to get passed. Because although he's not running in the next election, the House Republicans are going to be running in the November 2026 midterms. So I think that if we're talking about what we can do in Canada, what is the one number that we can actually influence to end this insanity, is to do all we can to get those approval ratings down. In other words, to really hit. Now, it's unfortunate, but we didn't start this economic war, but it is a war. We have to hit back hard, and we do have leverage. And by the way, we have more fiscal room than the U.S. has. What Donald Trump has, like he's doing with trade, he doesn't have Congress on trade. He's got the magic wand of executive order and using arcane loopholes to get through what he wants to get through. He doesn't have control over fiscal policy, but we do. And I have a tough time believing that if there was an emergency session held in the House of Commons, anybody would vote against a large-scale fiscal stimulus And especially, like I said, to make it palatable for the provinces with the resources out west to do what has to be done. Because I'll tell you that if we cut off electricity, natural gas, oil, and other things, critical minerals, there's 34 of them that Donald Trump is coveting. That's why he wants us as the 51st state. No different than why he wants Greenland, okay? We're Greenland on steroids. So that's the way you hit back. You hit back by doing everything you can to get his public approval ratings down, because that is when his supporters will start to abandon him.
Okay.
And that's when all this ends. You know, I'll tell you the truth. He compares himself to William McKinley. And everybody just says, oh, that's just great. William McKinley. He's the new William McKinley dubbed himself the Napoleon of tariffs, brought in large-scale tariffs in 1890, and the U.S. economy spent a third of the time in the next 4 years in a recession. And then by 1894, those tariffs were completely removed. So I would just say that what we have to do is create the conditions for Trump's approval rating to nosedive. That's what ends this thing. And that would be my strategy.
And then through all of this, what does the Bank of Canada do? What happens with interest rates?
Well, they're going to be cutting. And I know you want to talk about the next meeting. They'll be cutting a lot more. I mean, if we're right about the uncertainty impact, and look, there'll be the inflation impact will be temporary. Like, I know people will laugh. Oh, there he goes again, transitory. This will not last 18 months. This is not the same as COVID. I think that we will have a temporary inflation shock, for sure. But what is going to overwhelm that and bring inflation down is the contraction in aggregate demand. We're going to have a gaping hole in the economy that creates a tremendous amount of excess supply. That will bring inflation down if you're willing to look at the situation 60,000 feet up in the air and not talk about, well, what's the CPI reading is going to be in the next 1, 2, or 3 months. To me, that's playing small ball. I think that when we model all this out, okay, the overnight rate is going to 1% or lower. Okay, I think it's going to have to get there. And look what the ECB did today. Okay, they've already cut 150 basis points, and they haven't signaled an end yet. And they got big fiscal stimulus already coming. We haven't even done that yet. We should get the ball rolling on that, I think, immediately. And I think that the Canadian dollar, the Bank of Canada should sanction, for lack of a better term, sanction a Canadian dollar going to, call it 65 cents. We're going to need that as a crutch for our exporters, considering what's going to be happening on the tariff side.
Right.
So lower rates, lower Canadian dollar. Well, as if we haven't seen that already. I know the Canadian dollar has rallied in the past few days. I would be fading that big time. And then I think, my longer term view is that Donald Trump did Canada a really big favor here because he has shocked us out of our complacency. I can't pick up a newspaper these days and I'll read about how we're finally, after decades, going to attack interprovincial barriers, how we're going to fast track, mineral production, pipeline expansion, and finally trade diversification, all these things. But the one thing I would say for the next government, whoever's going to be leader, and this is the one thing that Justin Trudeau should have done right away after Trump got elected in the first go-round, is we have to take our corporate tax rates. Our top marginal corporate tax rates have to come down to where they are in the U.S. or even below. And because the one thing that's plagued this country for the past decade is unrelenting, unprecedented outflows of direct investment, which is why there's no growth in the private sector capital stock and no growth in productivity. So I would say whatever we do in the fiscal side, I think that what has to be on the table is a decline in our top corporate rate to levels that are where they are in the U.S. or below, because we're going to have to attract a lot of foreign investment. And that's been one of the death knells for the economy for the past 10 years that nobody talks about.
Are you bullish on gold?
Still bullish on gold. I mean, it's in a consolidation pattern. Admittedly, being bullish on gold and seeing it just consolidate with this massive downdraft in the U.S. dollar. Well, the U.S. dollar, by the way, has broken all its trend lines. Now the 50-day moving average is moving lower, so the dollar bull market looks over. Interesting insofar as that's a a report card on what the administration is doing. But I think gold, if you're asking me, I think right now, after the run it's had, making front page news, sentiment is very bullish. I'm still bullish long term, but I can understand why you would pause for the time being. However, if you have not been involved in gold and you have, say, a 3 to 5 year view, I do believe it's going to be going a lot higher because there's only one quotient that matters for gold. You know, you can't measure gold on a price to earnings ratio or price to book or dividend discount model. You measure gold on 1 divided by C, where C is certainty. It is inversely proportional to certainty, or it's directly proportional to what you talked about at the open, which is uncertainty. Gold is a bastion of stability in the portfolio in troubled times. So if you've been involved in the gold trade, stick with your position. I don't think you have to add this second. If you have no exposure to gold, use this period of consolidation to start building a position in it.
David, there's a lot more we could talk about, but we really appreciate your perspective as always, and